time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Kenny Polcari's in New York, back here in his own stomping grounds. Senior market strategist, Slate Stonewell. Good to see you.
It's always a pleasure. How are you? You know me, I love coming back.
I know, and we love when you're back. Glad you're here. So you're going to be talking about some trades today. Just give me a glimpse into what you think the Fed should be doing, or Fed Day. Right now, the markets are, in this wait and see a little bit.
Listen, I'm in the camp that the Fed should have raised this at this meeting. I think they should have raised it another 25 basis points just because inflation has started to tick up. CPI and PPI have both started to raise its head. Energy is going to create a problem down the line because transportation costs is going to start to affect everything we have in terms of higher prices. So I think it was a little bit premature to pause yet. If anything, I would have paused in November versus pausing now. But look, I think they're going to. I think now they have to pause. They basically told everyone they're going to pause. So now they can't do anything but pause. What I'm concerned about is what happens to the PCE next week, which is their favorite inflation rate. But then what happens next month with the CPI and PPI as oil now kisses $94 a barrel, $92 a barrel yesterday.
Yeah, and I just saw the headline that just went by about oil and, more draw on oil. So supplies.
The only thing I'll say is that this morning, we heard that inflation in the UK actually declined, even with rising oil prices, that food actually was the biggest decline in the CPI in Europe, in the UK. And I know that now they're even talking about whether the BOE, the Bank of England, is going to pause tomorrow when it was expected that they're going to raise rates by 25 basis points. So that's going to be an interesting development tomorrow from them.
So we'll watch for that. All right, let's get to the goodies. Of course, Monster, when you look at a long chart, like 20 years.
It doesn't go up.
It's unbelievable. It was a beauty. I should have known. Just go with
we should have all known.
Yeah, what you drink, what you do. I mean, I should have figured that out. But anyhow,
it's in the energy. It's in the energy drink space. You know that. They've got some key acquisitions. They're now moving into alcoholic beverages as well as specifically designed women's energy sports drinks. And we know that market is set to explode, right? So just take a look at Monster. It's backed off a bit from its high at about $60. I think it's backed off about 8%, which is only about 5 or 6 points. But it's in a very tight range. And I think if it holds here at the trendline support, which I suspect it's going to, then, we're going to go right back up, right up to 60 anyway, and if not further.
Yeah. And it did come out with its numbers, and then on August 7th, it had this large percentage increase, and Ben will see the candle right after the earnings. But what's going on with the chart today, Ben Lichtenstein?
Well, Nicole, we have seen a little bit of weakness as of recent in terms of Monster, but this could just be stacking up for another longer-term buy opportunity as the bulls have been handsomely rewarded for sticking with the trend on shares of MNST. Let's get into, first and foremost, the 30-minute candle chart. I've got a look at some of that weakness, a series of lower highs that have come into play, and how we still have really yet to reject this lower level, recently bottoming out around 55. Top side, left side of your screen there, you can see we're up around 59, and you can see on the way down. I went ahead and identified a couple of areas of consolidation that formed just to kind of get your eye focused on this bigger picture, overlapping rotational price activity that occurred around 58 and now currently around 56.20. So as long as we remain below 58 in this instance, still somewhat bearish, somewhat weak, right? Nothing to get too concerned about, though, when you take a look at this chart. And I like to kind of take a step back because, as I mentioned, some of the recent selling we've seen, possibly just a buy opportunity, right? Because when you're looking at these areas of consolidation, if you're looking to participate with the trend, which has clearly been to the upside here as values moved to higher and higher levels going back to, we're talking the spring of 2022 last year, and we were trading around 35 all the way up to, again, recently around 60. You're looking to either, buy a opportunity, a test of a lower extreme that fails to break out to the downside here, or you're looking to buy that initiative move to the upside. So again, as we test this lower extreme, the bulls are going to be looking again back to, as I mentioned, that $58 level, back above 58, opens up a door for a retest of that $60 level. I just wanted to show you that longer term trend because, Nicole, you mentioned how this is, Kenny, you guys are talking, we both, or all three of us should have known, right? Well, I coulda, shoulda, woulda, obviously, in this instance. Look, areas of consolidation that formed to higher and higher levels going back to, we're talking 2007. This is a stock, as I mentioned, that's handsomely rewarded the bulls for sticking with the trend in this instance.
Handsomely rewarded the bulls for sticking with the trend, and that's been the trend. I mean, you've been looking at that, Kenny.
Yes.
Right, and so that's what he's showing on this long-term chart. I mean, you just saw it up there. Final quick thought on Monster.
And it continues to, I think, impress, right? And continues to reward investors. And look, it's in a very interesting space. So as a core holding maybe, or as an additional holding to somebody's portfolio, they should absolutely at least consider it, because I think it's in a great spot. It's a great sector.
Right. Okay. Let's get to the next one, and that is Microsoft. Now, I teased it when I said screaming buy.
Yeah.
I didn't have enough time in the tease to say if this, if that. That's your job.
Right.
You explain to us what you're looking at.
First of all, I own it, right? It's always part of the core portfolio of Microsoft, so I like it to begin with. And it's backed off about 10% from its most recent high, as the market has kind of struggled here in the month of September, and as we worry about what the Fed's going to do, what they're not going to do. And so I'm waiting on this one today. I think if this backs off the trend line support at 315, then it's absolutely a back up the truck screaming buy type of an opportunity.
Yeah.
But I think a lot is going to depend on what we hear from Jay. So this one, I like it. I own it. I'm going to wait until after the press conference today to see how it reacts, depending on what J.J. Powell says, right? Because if he's more hawkish, then the pressure will remain on Microsoft. If he turns more dovish, I think then this rallies right away.
All right. So don't do anything until 2:30.
I would wait till on this one. I would wait till the conference.
Okay. So let's get the news from the Fed, and then we'll make this decision. Ben, your thoughts on the chart, please.
Another instance, Nicole, where we're seeing a little bit of short-term weakness as we head into the Fed meeting, as we watch rates on the rise, the 10-year back to, well, inching its way up to 4.5% now. You got the 2-year above 5%. And, well, taking a look here, first and foremost, at shares of MSFT. Microsoft, as I mentioned, come under pressure. We're looking at from the highs last week up around that 340 level down to recently around 325. We went ahead and identified just 3 areas of consolidation on this chart that have formed. One, a little bit more short-term than the other 2 you can see, but you can also see the overlapping, well-defined horizontal pattern that shifts into a vertical phase, and then it's just kind of wash, rinse, repeat, currently in that overlapping rotational value phase, currently balancing around 328. If we were to take out 332, that's what the bulls are looking for, and I'm giving the benefit of the doubt to them in this instance still. Why? Because of this chart. You can see on the 4-hour candle chart going back to the beginning of the year, I've got, 5 areas of consolidation in this instance. Now, we are below the 335 level, but still holding up above the lows that we saw back in August, which coincides with that key area around 307, kind of the line in the sand in terms of this working assumption that areas of value continue to move at higher and higher levels. Bulls want to see this thing take out 370 and then form a new area of value at a higher level. Speaking of that longer-term trend, here we're going back to 2018, and you can see again how we kind of just recently ran into a bit of a double top, but I think hanging in there pretty well amidst what we're seeing in rates and some of the other headwind for stocks. I mean, to see shares of MSFT hanging out here, what are we just now, $40 off that high that we saw earlier this year. Definitely something to keep an eye on here. I agree with Kenny in terms of potentially the Fed could make or break this one over the next few hours here as we head into the end of the year.
All right, Ben. Well, as we take a look at these charts, I mean, Kenny, it's unbelievable when you see the run-ups and you're looking at these, and they're in different sectors, right? One is more a staple, one is more, you're looking at technology. And I like how you brought us a variety. I don't know if you have any final thoughts after Ben's showing of the Microsoft chart before we get to Bank of America.
No, I just think Microsoft is one of those core names in anyone's portfolio, and you need to take advantage when the stock is dislocated. I don't think the story for Microsoft has changed, so I'm not looking for this complete disaster. But if it trades down to the trend line, you got to back up the truck.
Back up the truck if it goes below the trend line. Okay, so we will watch for that. Last but not least, when we look at Bank of America and we think about these financials, and this was something people love to own, particularly in a higher rate environment. But then we had the whole regional thing. They just sort of went out of favor. I mean, this was a $38 stock. Now it's a $28 stock. But, what are you thinking?
But look where it's been trading. It's been trading in that 28-30 range for a fairly long time. It is Bank of America. America. So this is not a regional bank, right? It's way underperforming, right? It's down 13% on the year versus its peers. But that's why I think it's even more attractive to me. First of all, I own it, like I said. Yep. Down here, I've been building even a bigger position because I think it's kind of holding really tight. If Ben will draw out that chart, and he'll show us how it's been trading very, very tight. I suspect in an improving economy, in a rising rate environment, that this should play catch up at some point. And I think it's, and besides the fact that it's a 3.5% divvy, so they pay you for owning it as well.
Yeah, good point.
So I think it's just a good, solid story. Again, as a core financial holding, you know, it's that and JP Morgan for me, but.
Right. All right. So we'll give Ben the opportunity to take a look at this chart for us. Ben?
Well, we're going to have to go 2 for 3 here today, Kenny. Unfortunately, I don't see the upside potential in this one. It appears to be still in this downtrend, not only on that shorter-term time frame, similarly to the other two names we looked at, but also still playing out here in terms of the longer-term time frame as well. Let's dive into, first and foremost, the hourly chart here. I've got 2 charts to look at here today. It shares the BAC and some of the weakness, again, as I mentioned here, on a couple different time frames playing out. Here we're looking at the move lower here that we've seen since the highs. They were trading up around 33. If you remember, end of July, you can see a couple areas of consolidation that have formed at lower and lower levels. Not a significant move to the downside, but value forming at lower and lower levels nonetheless, right? No rejection of that pattern that's playing out here. No indication that we've rejected this lower level. Bottoming out here potentially, but until we take out 31.25, in my opinion, this stock still continues to and has been and remains under pressure. And let's take another step back here. I just want to show you what's going on. Actually, I want to pull this chart up here because you can see this double top that occurred back around the $50 level in the beginning of last year. And again, we were just looking at the move lower that we've seen from this $30, $36 level all the way down to, again, recently bouncing around 30. But here you can see this has been playing out over the last couple years now. Not just this year, not just since July here and some of the weakness we pointed to on that more granular time frame, but here it is on the longer term as well, on the daily candle chart here. So basically weakness across the board here. Again, on that more intermediate time frame, you can see that we haven't rejected this lower level, and that continues to be the case here on the daily time frame as well. As long as we hold below 34 here right now, and even below 30 at this point, still kind of opens up a door for a retest of the extremes, the lows that we saw earlier this year. So yeah, I don't really see anything to get too excited about here, mainly because we have yet to take out any of the significant areas that were established on the way down. Nicole, we're really just accepting this lower area of value now.
Yeah. All right. Ben, thank you for that. Always amazing on the charts. Let's see what Kenny Polcari has to say in reaction to your analysis today.
So listen, Ben, I love your analysis. I think it's fine. I just happen to like the space, and I like that name in the space. I've been using this level down here, right? I started, my average is probably right here at 29 bucks. So I'm not, you know, out of the money on it. I'm right there with it. But I think that this is going to be one of those banks that is so underperformed that when it turns, I think this one's got the opportunity to turn big, so I'm going to play it that way.
All right. I'm going to leave it right there, friends. For the big 3 today, we had Monster, Microsoft, Bank of America, and we thank you, Ben Lichtenstein, always for the charts. Thank you, Kenny Polcari.
It's always a pleasure.
For being here in person. Appreciate that.